Welcome back, everyone. I'm John Furrier, host of theCUBE. Here in our NYSE CUBE studios, of course, we have our Palo Alto studios, and now here at the NYSE as part of the NYSE Wired program and community, connecting Silicon Valley and Wall Street. Tech and money are merging, the convergence of those two. Tech has gone mainstream, you see AI, you see blockchain everywhere. Blockchain and crypto infrastructure plumbing, now going mainstream, clear lines of sight into what's going on, where the money could be made, and clearly the entrepreneurship forum is great. Robert Leshner is here, CEO of Superstate, blockchain builder, protocol developer, entrepreneur. Thanks for coming in.
John, thanks for having me.
So, on the monologue there, I talked about money and tech coming together. The confluence of the two worlds connecting is kind of monumental. It's a historic time. One, the government's behind it.
Yep.
That's a huge deal. We'll hope that continues. But there's an entrepreneurial vibe that's exploding because the infrastructure, it's like the cloud early days. Hey, get a little EC2, S3, some queuing, some building blocks, and then a lot of other stuff happened after that. That's kind of going on now at a much larger scale.
In a big way, and this really started when blockchain started to emerge on the scene. Initially with Bitcoin, this was a permissionless, ecosystem for value to move that anyone could participate in. And then later with Ethereum and then Solana and other blockchains. And you can contrast this to really the pace of financial innovation over the last 100 years, which was everything evolved very iteratively and very slowly.
Controlled.
Bit by bit, very controlled. And that's because, systems were very locked down and very centralized. And to make changes, you had to get buy-in from so many different players, around the country and across Wall Street. And what's happened over the last few years is developers, and entrepreneurs have been able to build completely de novo systems on their own to route value, to program value, and to move value in the ways that they envision and achieve incredible scale extremely quickly. And when I look at what's happening here, money and tech have merged, and it's all due to the fact that blockchains are so open and so permissionless, and it's allowed the creativity of 1,000 entrepreneurs to bloom in a way that's just 100 times the velocity that it was in this very iterative fintech, changing.
Yeah, I mean, and it's accelerating. Robert, I want to get your thoughts on the mainstreaming of this, what you just talked about, because there's, I won't say baggage, I just said it, but there's some iteration in blockchain. We had a dark time there in the US. People wanted to talk about it, but didn't want to. But now we're in an open, thriving environment.
Let's talk about it.
We're loud and proud in the industry. But what is that mainstream confidence level? The enthusiasm's high. There's some skepticism. Attitudinal scale is out there. But I'd say most enthusiastic I've ever seen. Confidence is what people want. What do we need to see for confidence?
Yeah, here's what I think, builders see, here's what institutions see, here's what the government sees, and here's what regular individuals see. They see a system that works. They see blockchains that even in the craziest situations where, Sam Bankman-Fried stole a bunch of money from FTX and prices crashed, the underlying technology and systems have worked tirelessly 24/7, 365, basically without issue for years. And what people see and gives them confidence is the fact that these are foundations to build new applications on top of that are basically bulletproof and that have operated through thick and thin. And now, you see the regulatory system, saying this is a powerful technology that works. The technology works. Let's get behind it. And, contrast that to just a couple years ago when people were scared of this new technology.
Yeah, upgrades are going on all the time.
Yeah.
Things were changing, things were forking.
This is not a technology to be afraid of. If America were afraid of the internet, we wouldn't have everything that's been built over the last 30 years. We wouldn't have the biggest companies on earth trading on the New York Stock Exchange and trading across the world being built here. If we were afraid of the internet, nothing would exist.
I'm glad you brought the internet up. I want to get your thoughts on something because in the early days of the internet, one of the big things that was tracked by Mary Meeker, who was an analyst at Morgan Stanley at the time, was online population growth, which is how many people get online. At that time, it's hard to understand now, but there was a point where no one was online. It was they actually tracked, wow, it's gone up. The growth rate of more people coming online, whether it's dial-up on AOL or whatever it was, internet broadband then came on. So what's the metric in your mind for your business and for financial? Is there an online assets? Is it online users? How would you, it's hard to compare apples to oranges there, but it was a clear metric. The more people that got online, more people searched, more people did commerce, more shit happened.
Yeah.
Right? So what's the equivalent metric?
It's a great question. There's really two primary metrics. that I think anyone listening can think about. One is what % of the population is interacting with crypto or blockchain-based assets, right? And if you look, Coinbase has like 40 million users in the US, right? Like you have Robinhood, there's a huge number of people trading crypto. The total number of Americans at this point is probably close to about, like 20% of the population in one way or another is touching crypto assets. And that's a huge number, right?
That's huge.
By the time 20% of the population had used the internet, it was game over. The internet was an inevitable victory, right? We're sort of there with crypto. The second piece, and I think we're much earlier, is what % of assets, what % of the market cap of wealth is actually recorded on a blockchain, trading on a blockchain, and absorbing the inherent advantages of a blockchain-based system. And that's still incredibly small. If you look at what's recorded on blockchains, right now it's just crypto-native assets that were issued for the first time on blockchains. Typically, the assets, issued by a project that is a blockchain or is a blockchain application. It's not yet the companies on the New York Stock Exchange, right? Yeah. And so the total market cap of crypto is only about $4 trillion. And when you compare that to roughly the $700 trillion of assets in general, it's a big number, but it's a very small number. Indicative of how much upside we have as an industry.
Yeah, and I would also put an exclamation point on it by saying that what you just nailed was the metric that matters is user experience. The 20%, whatever that plus number is already validation. The rest is just like in the internet, dial-up's getting faster. Broadband comes on. Websites load faster. You got Flash. So I think the mechanisms are going to come downstream. Okay, so let's talk about what you guys are doing and what your opportunity is. Can you share your venture, what you're focused on, what's the market, and what's the business model and value proposition?
Absolutely. So at Superstate, what we're doing is we're taking all of the companies and all of the stock and all of the securities that aren't yet on a blockchain, and we're bringing them on a blockchain. And the way we go about this is we partner with security issuers, and that can be a fund, and we've created a few funds. That can be public equity. We're working with a number of different public companies. And what we do is we help those issuers take the asset that would otherwise trade in a very legacy system. And and I don't want to knock what's happening behind here because it works.
It's modern legacy.
But we help them future-proof their securities. And we bring them onto a blockchain. And when we bring them onto a blockchain, they inherit the advantages of blockchain-based assets, the things that people see with crypto-native everything. They see instant settlement. They see global access. They see 24/7, 365 day of the year, 0 seconds of downtime trading. And what we do is we enable all of these securities to come on-chain. And the idea behind this is, that $4 trillion that exists today, my hope is that it goes to $700 trillion and that all of the assets start to live on a blockchain instead of the way they're recorded today, which is through very legacy transfer agents that still use leather-bound journals in some cases, and through like
the clay tablets.
The clay tablets, and through like layers upon layers upon layers of different middlemen and record keeping and
It's so funny, I go to my Bank of America statement online, it's an app and there's no money, it's digital. I mean, I'm reading my balance. Like, why is the back end of that like antiquated and outdated?
Right, and I mean, there's probably like 20 overlapping systems at Bank of America, that have that number in it.
Okay, talk about the chain. Is it Solana you guys are working with? Is it Solana or all chain? How does it work? I mean, is it specific to the chain?
Absolutely. So we're starting by bringing securities to Ethereum and Solana. We chose these two blockchains because this is where the largest user bases are today. Whether you look at retail, whether you look at hedge funds, whether you look at sophisticated investors, these are the chains with the most adoption from the individuals and professionals. And that could change. Over time, there might be new blockchains that emerge, but today, Ethereum and Solana have the best adoption and critical mass if you're going to be recording and issuing securities.
Talk about those two chains, ironically, have smart contracts. So we're talking about programmable money at this point. So I brought that up because money has always been different from the institutions. You got programmable money and you have smart contracts, which enables transactional elements to happen, which money's then part of. So there's two things going on there. Codes being written, apps are integrating. It's a very app-friendly environment. What's the impact there for you guys?
Well, smart contracts are just a fancy way of saying computer program. And it's these computer programs that enable the incredible properties of blockchains to emerge, right? So what a smart contract is, it's a computer program that's open source that lives on a blockchain that you can't really change the code to, so that you can see how it works, and it defines how to route value around, right?
Yeah.
And it enables you to do like incredible things. Like, if I'm a hedge fund, it would, I could set up a smart contract that enables me to meet a margin call every time, I am required to, automatically, like instantaneously and without any...
No middleman, nothing.
With no middleman, right? And what these smart contracts allow is just for the like predefined programming of routing money. And that's incredible. And what that allows is, all of these assets to operate with extraordinary efficiency, with no back offices, without middle offices, and without, oftentimes front offices. It allows financial markets to be created. In a lot of cases, there's people building 10, 50, close to $100 billion financial markets that are just running autonomously. Yeah. And that's something that has never been achieved before prior to smart contracts.
Talk about the strategies needed to do assets on chain and securities. I mean, I was riffing with an entrepreneur who's in here a couple months ago. Why can't my stock options be on chain? Why can't I stake them?
I mean,
it's a matter of time.
It's a matter of time.
What's the process? What's the strategy? So I went into ChatGPT and prompted, what's the strategy to move on chain? What would the answer be?
Yeah, so the strategy that Superstate uses is we're an SEC registered transfer agent that partners with issuers to record their securities as tokens on blockchains. And we've built out an ecosystem of compliance and technology to enable, issuers to meet, and Superstate as a transfer agent to meet all of the requirements of the securities laws today. Mm-hmm. And it really comes down to, therefore, a couple things. One is, business development and sales, and, explaining to companies why this is the future, right? The second is technology, that's been built. The third is the regulatory structure. That's already exists. The SEC has been coming out with, modernized guidance for transfer agents and for blockchains and for tokenization. And then lastly, and most importantly, is the demand. And we're finally at a point where there's starting to be demand for tokenized securities. And so all of these four important building blocks are coming together, and we're just starting the wave of like on-chain adoption.
Robert, I got to ask you, because you're kind of an OG in crypto, if you look back to, I'd say 2014 timeframe, between, I'd say 2012, 2013 to 2017, if you were an alpha engineer, you were in blockchain, because it was the most intoxicating, intellectually attractive market to go solve a problem. I mean, you were there then. We were covering it. We saw that firsthand. And then it went through kind of like the ICO craze and kind of the dark period. Now we're back. If you look at AI, go back to 2017. So blockchain hands off to AI at between 2017 and 2021. All the alpha engineers were working on early AI infrastructure and algorithms. Now you got both coming together. To scope this, the order of magnitude game-changing position of crypto infrastructure, knowing that progression happened and what it means today, because I think this is not well talked about, but it's the confluence of those two, and there's overlap, but there's also still kind of pure player builders and engineers and stuff, people working on stuff. It's almost symbiotic. And you're seeing AI being infused into blockchain. Why not get all the compliance data from using AI and suck that in and then apply it into the transparency layer of blockchain? Talk about that.
Yeah, well, I agree with you. I think they're absolutely starting to converge. It's very early in their convergence. The reason why they fit together so well is blockchains and smart contracts create the infrastructure and the environment to automate the execution of transactions, right? To define and execute on trades, the routing of money, payment, all of these things that are like the foundation of financial and capital markets, right? Yeah. And AI is the decision making, and it's a smarter and smarter and smarter ability to make decisions and answer questions. Really to say, when should I use this infrastructure and how should I use it? And these two things are starting to converge. And the reason why they're going to fit so well is crypto doesn't stop. It runs 24/7, right? 365, and it's global. Yeah. And the convergence of AI plus crypto means you can have autonomous systems, software, agents, whatever you want to call the AI, right? Routing value around the world in the ways that it sees fit, 24/7, 365. Yeah. And that combination is just so unbelievably powerful. And we haven't really seen what it looks like in practice yet.
Yeah, it's coming.
But it's coming.
And I ask because what you're doing at Superstate is interesting, because you're going right down the path of what all the leaders do, which is you knock the foundational stuff out first. That's infrastructure. In cloud, it was IaaS, infrastructure as a service, and then you had platform as a service, and then SaaS sat on top. Okay, it's very simple stack. the same thing's happening in finance. There's a financial infrastructure replumbing.
Absolutely.
Describe that trend. What is actually happening from a blockchain, or I don't know what to call it, blockchain or crypto infrastructure, but the financial infrastructure. What's the IaaS version of it? It's not that simple, but I'm trying to get at it.
It's not that simple. There's a lot of competing factors here. But when you zoom out, what's happening is we have a number of blockchains that are getting better and better and better every single year, and more assets are being issued on those blockchains, and they're being used for more and more financial activity. So whether it's Ethereum, whether it's Solana, whether it's private blockchains, whether it's all of the things in between, you're starting to see the foundations,
the proliferation of chains.
The proliferation of chains with better and better tech every single year. And there's a number of incredible blockchains that can process a lot of transactions and can route a lot of value. And we're starting to see adoption from application developers there. So the blockchains themselves are getting better every single year. We're starting to see more and more people plugging into those blockchains and building on top of them. Whether it's businesses like Coinbase or Robinhood, or every bank is exploring a stable coin. Yeah. Everybody is starting to plug into those blockchains. And the way they're doing that is with assets issued on those blockchains. That's the second core building block, right? We call them tokens, and you can call them a bunch of different things, but simplest, let's just call them
an
tokens.
instrument, a mechanism of something.
A mechanism of recording an asset.
On the blockchain first principle idea of speed, transparency, immutability, all that.
Exactly. Yeah, and 24/7 and global, right?
Yeah.
And the ability to automate all of the activity. So we're seeing the tokens. And the next piece of the infrastructure here is just, the financial and capital market side of this. It's how do you bring it all together? Whether that's trading, whether that's borrowing and lending, whether that's derivatives, whether that's, very creative applications that do something different that no one's really conceived of yet, or whether something as simple as risk management and insurance. You're starting to see the financial markets come together, combining the assets and the blockchain and the users.
I love that answer, because a lot of people ask me that question, and I say it's not as simple as SaaS. There's no financial app from the bank. It's a systems design.
Yes.
They have to integrate in, and computer science 101 would tell you abstraction is a good way to do that.
Absolutely.
Right?
And the really interesting thing is, on a blockchain, you can build things to either be completely open, where you're oh, anyone can plug into this. You can build things to be completely closed and private, to resemble more the way dark pools operate. And you can build anything in the middle and in between, where it's semi-open. And it's going to lead to a lot of different creative applications and use cases that I don't think most people that are used to one way of doing business envision.
I mean, it's classic stack. You got the foundational infrastructure, optimize for that, enable, it's enablement, so you have to enable the next layer.
Absolutely.
And then we'll see what happens. Amazing time. I love this market right now because it matches everything that I like. Disruptive enablement, entrepreneurship, dislocation, structural change, but now you got old guard and new guard interacting. It's not a displacement. There'll be some lost territory. There'll be some crumbs, maybe some breakfast gets eaten, maybe a little bit of lunch from some of the incumbents, which is good.
Yeah, I definitely think it's collaboration in the middle of incredible change, right?
Yeah.
The one thing that I think is going to change the most is we're going to start to see more and more things that have historically been done, on Wall Street through investment banks and through major exchanges and through, traditional institutions start to move on chain. We're going to see more and more trading moving on chain.
Why wouldn't all assets be on chain? It's just a no-brainer. And again,
I believe they will.
Well, the infrastructure, again, to your point, the maturization of the infrastructure, once that foundation gets set, then the layers come in, then you have systems. And those systems can be tailored for the use cases of the systems that integrate in.
Yeah, I mean, fundamentally, we're evolving from leather-bound journals that record who owns an asset with 30 different backups and sort of competing versions that might disagree or have to be reconciled on a daily basis, to one radically transparent 24/7 source of truth that everybody can plug into and tap into. And it's just a better system for assets.
It came up in our breakfast today at the Solana office around transparency. I mean, it is ultimately almost pure capitalism at its best, because it's all there. The lights are on and it's secure. All right, put a plug in for the company. You guys are growing. Give us state of the stats, where you guys are, how big you are, what you're going to do, what's your focus?
Yeah, so at Superstate, we've now announced that we're working with about 6 public companies to tokenize their stock and bring it onto the blockchains Ethereum and Solana. We have a number of other issuers that we're working with. Coming up in the next weeks and months, really what we're going to be doing is taking these public company stocks and help plugging them into DeFi applications and the systems that exist on blockchains that we didn't build, that other people are building. The trading venues, the borrowing and lending venues, the derivatives venues, and plugging in public companies. And over time, what we're going to start to see is more and more public companies working with Superstate to tokenize their...
And the value to them is what?
The value to them is their stock can trade 24/7. The investors and shareholders of their stock have new use cases. Like they can use it as collateral with, you know, an application. They can borrow against it. They can do all these...
The Robinhood factor is going to kick in.
The Robinhood factor is going to kick in.
And other apps are going to come out.
And we haven't even touched on capital formation yet, which I think is really the holy grail, which we're
and highlight that real quick for us. What does that look like? What does that market look like?
So, you know, on a blockchain, you have the ability for a global investor base to participate in capital markets 24/7. And we haven't really seen this used for capital formation for public companies before. We've seen it used for capital formation for crypto native projects. You know, people have raised $500 million in an hour on blockchains. You know, this is, you know, it happened again and again and again. Yeah. But it's always been for very crypto native projects. Yeah. I think the thing that's coming and that we're really excited about at Superstate is how can you use a blockchain once you have tokenized shares for capital formation. And that's really the next chapter.
It's interesting. And we can probably do a whole riff on this later, but one of the things I've been saying coming from Silicon Valley here is that the role of the product manager is to build products. And I think what you're teasing at is here, there's going to be a product management tsunami because the ideation of what could be possible, just take capital formation. Someone's going to create those products.
Oh, of course.
I mean, it's Lego blocks, but it's not, but the IP will be, does this dog hunt?
Oh, the dogs will hunt, trust me.
I mean, there's with money involved.
Yeah.
It'll have
The dogs will hunt much more efficiently than the way it's currently done on Wall Street.
I was saying to someone the other day, I'm like, so what's the Wall Street vibe on crypto? I go, look, first of all, the hype cycles, well, it doesn't matter in New York. It's money.
Yeah.
If the money's on the table, it's real. And it is. And I think the market is so hot because the fog has cleared, right? It's like people have lines of sight into legitimate business opportunities, and the crypto companies that are now migrating back into the US or here, their numbers are phenomenal.
Yeah.
So it's not like they're not doing great. So you got some companies that are just blowing away the numbers. They can go public tomorrow here.
Yeah, this is a massive growth sector. And we're like in like the second inning of it. You know, this is like, it's still like so hilariously early, given how much, you know, building is ahead.
Robert, congratulations. It's great to have you on theCUBE. Love the energy. Again, this is a great entrepreneurial market. Love what you guys are doing. Continue to do it. It's more change coming. You're enabling that. Thanks for coming on. Appreciate it.
Thanks, John. Appreciate it.
All right. I'm John Furrier, host of theCUBE, doing our part to get this content on chain, sharing here. It's part of our Crypto Trailblazers, where we interview the leaders who are making it happen as a new era, a new generation, a new cultural shift around money, programmable money, and also assets, all going digital. The digital, physical and digital are merging and have merged. Now it's just instrument it and build the apps. Thanks for watching.